If you're paying attention to the housing market or even just thinking about buying, selling, or investing, then you need to hear this. In today's video, I'm breaking down exactly what's happening with home prices, mortgage rates, and where the market is headed in 2025. Now, before we get into all that, there's a major shift happening right now, and it's making headlines across the country. Let's take a look. Now, people aren't just moving, they're moving for specific reasons. And it's no longer just about the weather or a change of scenery. Now, data from a 2024 migration pattern study shows that people are relocating to work to be closer to family and friends and for affordability. And get this, the top 5 states people are moving to right now in order are Arkansas, Rhode Island, North Carolina, Washington, D.C., and Idaho. And there's a clear trend behind these moves. It's return to office mandates. Now, as more companies push employees back into the office, workers are following the jobs. And it's no coincidence that Fortune 500 companies like Walmart, CVS, and Amazon have ramped up in-office requirements. And now we're seeing office migration into Arkansas, Rhode Island, and Washington, D.C., all areas where these corporations have headquarters and major hubs. But that's not the only reason why people are packing up. The other big factors, affordability and the desire to be closer to family and friends. And this is exactly why we're seeing the biggest population losses in states like California, Illinois, and New York. These states are some of the most expensive and densely populated in the country, and people are realizing they can live a better life for less somewhere else. Now, the bottom line, migration patterns tell us everything about where real estate demand is shifting, and this trend isn't slowing down. All right, let's talk about home prices, because they're still climbing. Right now, the median price of a home in the US is sitting around $355,000, and that's up 2.7% from last year. But here's where things get really interesting. 5 years ago, the median home price was $244,000. That means prices have surged by 45.3% in just 5 years. That's nearly a 50% jump in half a decade. And keep in mind, that's just the median. Some properties, especially entry-level homes in high-demand areas, have skyrocketed 80, 90, even 100% in the same time frame. So if you're thinking home prices have crashed or that they're about to crash, the data actually says otherwise. Prices aren't falling, they're actually still climbing. So let's be real. Waiting for some massive price drop to finally get into real estate? That's not a strategy, that's actually wishful thinking. Home prices historically go up over time, and that's exactly what we're seeing play out right now. Take a step back and look at the last 60 plus years of home prices. What do we see? They trend up. Sure, there are some dips here and there, but long term, the market moves in one direction, and that's higher. And here's the kicker. If you bought a home 16 years ago, even at what felt like the absolute worst time to buy, guess what? You absolutely crushed it. You locked in a price that looks like a steal compared to today's market. Buyers back then had the same fears and doubts, but now they're sitting on a gold mine. Meanwhile, people waiting on the sidelines today could be kicking themselves in the future. The bottom line, real estate rewards those who take action, not those who sit around hoping for the perfect moment. All right, now let's tackle one of the biggest questions out there. If you can afford to buy a home today, should you? My answer, yes, and here's why. Too many people get stuck trying to time the market, and they think that they'll magically buy at the exact right moment. But let's be real. Are you seriously going to outsmart the entire housing market with next level technical analysis? Probably not. And even if you could, history shows that waiting usually costs you more in the long run. So if you're holding off, hoping for the perfect buying window, just know it may never come. Now I'll give it to you straight. If you're in a position to buy a home right now, that's a huge advantage. Not everyone has that opportunity, and if you do, congrats, because that's a big deal. And if you can find a good deal on a great home today, then in my opinion, pull the trigger. Because the right time to buy isn't when the market says so, it's when you're financially ready to make it happen. All right, now let's talk about housing supply, because this is where a lot of people get confused. Right now, we've got about 1.2 million homes listed for sale, and that's actually up 16.8% from last year, which sounds great, right? More inventory means more opportunities. But here's what we have to keep in mind. Before the pandemic, inventory was closer to 1.8 million homes. So even with this recent increase, we're still below normal levels. Now I need to break this down so you really understand what's happening. Yes, inventory is expected to keep increasing, but does that mean that prices are going to drop? Not necessarily. Just because there are more homes on the market doesn't mean that there will be enough to meet the actual demand. And that's the big concern. There's a ton of pent-up demand right now. If inventory rises but not enough to meet that demand, home prices won't drop. In fact, they could even stay elevated or even keep on climbing. And this is exactly why waiting on the sidelines for some massive price crash probably isn't a solid plan. Now, here's one of the biggest reasons why we're seeing such low inventory. It's mortgage rates. This is something that a lot of people overlook, but it's a huge deal in today's market. And it's called the lock-in effect. Here's how it works. A ton of homeowners locked in insanely low mortgage rates, 3%, even lower than that in some cases, when they bought or refinanced a few years ago. Now, if they decide to sell, they'd have to give up that 3% rate and take on a 6 or 7% mortgage for their next home. Now, that is a massive difference in monthly payments, and for most people, that does not make sense. So what do? They just stay put. They don't list their homes, and that keeps inventory way lower than it should be. And this is exactly why we're not seeing a flood of new listings hitting the market. And if you're a buyer right now, understanding this is key because it means the housing shortage isn't just going to fix itself overnight. All right, now let's talk about competition because it's out there. Right now, 22.4% of homes are selling above the list price, and that means we're back to a more normal range, but let's put that into perspective. Back in 2021 and 22, that number skyrocketed to 60%. It's pretty crazy, right? But even today, nearly 1 in 4 homes is still selling for more than asking. So as always, here's the deal. If you find a great home, you find a great real estate investing deal at a great price, don't play games. The bottom line, if you have that great deal in your hands, don't hesitate because someone else won't. Now let's get into what's next, predictions. Now, I never want you to overpay for a home, but at the same time, I don't want you making decisions based on bad information or unrealistic expectations. The truth is, there are great deals in this market today. They exist, but you have to be smart, you have to be fast, prepared, and knowledgeable to lock in one when you find it. So let's break down where things are headed and what you need to know moving forward. JP Morgan Research expects prices to tick up 3% next year. Now, Zillow and Moody's, on the other hand, they see home prices flattening or even dipping slightly. In Zillow's latest forecast, minus 1.2% from May 2024 to May 2025. Now, Moody's, plus 0.4%. Basically, what's going on is that nobody's expecting a huge move in either direction. Now, let me give you my take. 2025 is going to look a lot like 2024. No major price surge, no massive crash. It's going to be a pretty steady year for the housing market. But 2026, that's a different story. A lot can happen in 12 months. Inflation, global trade shifts, economic changes. But here's what we do know. Home prices go up over time. That's just the reality of real estate. So if you're always waiting for the perfect moment to get started, to get into real estate, to buy that home, you might be waiting forever. So if you can find a good deal on a great home right now, I say go for it. Because in 5 years, you're going to wish you had. All right, let's talk about mortgage interest rates. Because this is what's really going on and shaping the market right now. The whole higher for longer interest rate environment, it's here to stay. Mortgage rates aren't dropping like crazy anytime soon, and experts expect them to ease slightly to 6.7% by year end, but that's still way above those ultra low rates from a few years ago. Now lately, rates have actually ticked back up. So why is this? Inflation fears are creeping in again. That's got the Federal Reserve hitting pause on rate cuts, and right now, the market expects we won't see another cut for at least 6 months. But here's what most people don't realize. Mortgage rates aren't just set by the Fed. They're actually heavily influenced by the bond market. More specifically, they follow the 10-year US Treasury yield, and when that moves, mortgage rates move with it. When investors feel uncertain about the economy, they buy government bonds, which pushes yields down. And in turn, mortgage rates drop. But when investors pull money out of bonds because they expect higher inflation or more rate hikes, yields actually go up and so do mortgage rates. Right now, bond yields are bouncing around as investors try to predict what the Fed will do next. If yields stay elevated, mortgage rates will too. If they start falling, we could see rates inch back towards 6%. Now in the short term, I think we're stuck between 6 and 7%, at least for now. But here's the wild card, tariffs. If they start shaking up the economy, the Fed might be forced to either hike or cut rates sooner than expected. And this is why it's smart to keep both a close eye on the Fed and the bond market before making any major moves. All right, that's the 2025 housing market update, where things are now, where they're headed, and what you need to know. But if you take one thing away from this, it's that the best time to buy isn't when the market says so, it's when you're ready and can lock in a great deal. Now, if you got value from this, please be sure to like, subscribe, and drop a comment with your thoughts. And if you're serious about getting into real estate, whether it's investing, wholesaling, or flipping houses, you can check out realestateskills.com, where we have free training and expert guidance. This is Alex Martinez with Real Estate Skills. Thanks for watching, and I'll see you in the next one.